In this video, we'll go over how you can begin to utilize the Unusual Whales Options Flow. Disclaimer, the Unusual Whales Options Flow tool shows completed options trades. Nothing on the Unusual Whales platform is a buy or sell signal. So now that we've got that out of the way, starting off, the Flow side menu has three different views which you can toggle between. You can access the Flow menu, the full range of filters, as well as a legend with information pertaining to the feed. Using the Settings menu, you can customize the columns in your flow feed. One such column will allow you to save trades to reference later. You can save a trade by selecting the heart icon, and you can view all of your saved trades by selecting My Trades. The trades here are fully filterable as well. To unsave a trade, simply unselect the heart. Moving on to the feed itself. With no ticker in the search field, this portion of the feed will show the date, the overall put-call ratio of all tracked equities, as well as tallies for the overall volume and premium for both calls and puts. Inputting a ticker in the search field will expand this portion of the feed. Available to subscribers on the Super Buffet tier are live price quotes for the search ticker, as well as a calculation of the net options activity in terms of bullish or bearish, which we'll get into later. After inputting a ticker in the search field, this portion of the feed will turn into a button, which will open up additional data feeds. Unusual Whales offers a live feed and a 15-minute delayed feed at two different price points. As mentioned at the beginning of the video, the options flow shows completed options trades. All trade information is detailed in the feed, such as the time the trade was executed, the price the contracts were transacted for, and other values like the current open interest and volume on the contract. You would read the highlighted trade like so. At 3:59 p.m. on March 18th, NVIDIA 252.5 strike call contracts expiring March 25th, 4 contracts were transacted at the ask price of $15.60 a contract. The total value of the trade is $6,000. The contract's current open interest is $990 and the volume at the time of the trade was $900. So if you've noticed, I've been saying that contracts were transacted as opposed to bought in this case. I would prefer that you read the flow in this way, and here's why. While we can make assumptions about someone buying call contracts, we can never be 100% sure. There is no information attached to the trade that explicitly states that the contracts were bought or sold. We can come up with an inference based on the information we see, and can oftentimes make very educated assumptions, which is what I would call following the flow. Now, I know that it states buy on these call contracts. There is a logic attached to several pieces of information in the flow feed. The side and whether a trade is marked bullish or bearish is dependent on whether the trade was for call or put contracts and where the spot price is in relation to the bid and the ask price. A simple breakdown of this is as follows. A call that is at or closer to the ask price will be on the buy side and bullish. A call that is at or closer to the bid price will be on the sell side and bearish. A put that is at or closer to the ask price will be on the buy side and bearish. A put that is at or closer to the bid price will be on the sell side and bullish. The calculation of the net options activity mentioned earlier is based on the cumulative value of all daily trades split between the bullish and bearish ones. You should understand that there are 4 ways to trade an option. You can buy to open, buy to close, sell to open, and sell to close. The bullish and bearish, buy and sell logic attached to the trades in the flow feed operates under the assumption that all trades are opening trades. A resource to this concept will be linked in the description box below. It is possible for you to place a market buy order on a call contract and for it to be labeled as a bearish sell. This would occur if the bid and ask spread changed between the time the order was placed and when the order was executed. As you can see here, it is possible for the bid and ask to fluctuate even in the same second. Again, we can never with 100% certainty state that an options trade in the flow feed was purchased or sold. We can, however, describe the trades as a transaction which occurred at or closer to the ask or at or closer to the bid. From here, we can start to theorize about buyers and sellers and what kind of price action these traders may be looking for. That's going to conclude this intro to the flow menu and the flow feed. If you have any questions about anything covered in this video, please drop a comment below or come by the Discord server. A link is in the description.